1310 WIBA and Ask the Experts with Wisconsin Capital Management online, wiscap.com. That's WISCAP.com. Website is absolutely fantastic with a ton of great information about Wisconsin Capital Management. Also, there's a great opportunity for you to have a complimentary, no-pressure conversation with the folks at Wisconsin Capital Management. All you got to do is head on over to the website, wiscap.com. That's WISCAP.com. Joining us this morning from Wisconsin Capital Management are Nate and Tom Plumb. Tom, how you doing this morning?
We're doing very good, Sean. We had a little snow this weekend in Wisconsin, and now today we have some sunshine. We'll see. It's fall and winter starting to show its face.
Yes, it is. Yeah, you never know what you're going to. Ironically, I was up in the Twin Cities over the weekend. No snow. I get back home to Wisconsin, and there's snow on the ground. It's normally reversed like that. Nate, how are you doing this week?
Doing wonderful. Had a great weekend. Met up with my dad's old high school friends, so I heard all the good stories. So yeah, life is good.
Oh, that is great to hear. We've got a great opportunity, a conversation ahead about as we kind of look towards. We're already, oh my goodness, a couple of weeks away from Thanksgiving, and the new year is going to be here in no time. We're going to be talking about some year-end tax preparation and planning that can be done. Before we get to that, real quick, Nate, I did want to ask you a little bit about Wisconsin Capital Management. Of course, you work with your dad, Tom, who joins us each week as well. Let's talk a little bit about Wisconsin Capital Management, what you guys aim to do, and the type of folks that you guys are helping out each and every day.
Yeah, Wisconsin Capital is very unique in our field. So we have Wisconsin Capital Management, and we help individual clients with their investments and their tax planning. And then the unique thing about us is that we have our own proprietary mutual funds, so we can help anyone that has our minimums are $1,000. So if you feel like you just don't have enough money for someone to talk to something like that, that's usually not the case. And so yeah, we feel really lucky that we can help someone that just wants to put $1,000 into the Roth IRA, and we can help people that have $40 million. So it's very rare to have a financial firm as vertically integrated as we, and we love it because we like helping everybody.
It's great to hear that. It's so refreshing to hear that, as well as you think so often. And I understand like why some people might say, well, we're only catering to folks with a portfolio of, X $100,000 or $1 million and beyond. I get why that happens. And what I love about talking with you guys, and we talk about that, about really being very attainable to start working with you guys at Wisconsin Capital Management, Nate, is that so refreshing to hear, is that the threshold is very achievable to really get high-end service, high-end guidance and management. That's something that's very, very unique, isn't it?
Yeah, in our field, it's very unique. So usually, financial advisor, as you said, they have a minimums of $500,000, $1 million, or and essentially, they're not being mean. They have their own cost structure, and once you go below, their costs, that they start kind of losing money. So they'll take you if they like you, but our economic model is different. We started our preparing mutual funds just to help people, the middle class. And so that's where we sit. That doesn't say that we can't help people of very high net worth. We have all those capabilities as well. But, yeah, we're scalable, and that makes us special and makes us unique.
I love hearing that. And it's a great day to talk about being very special and very unique. It's a great day to get to know the folks at Wisconsin Capital Management. Head on over to the website, wiscap.com. That's WISCAP.com. You can learn more about Nate. You can learn more about Tom. You can learn about their history, how they can help you. Also, great opportunity at the website for that complimentary, no-pressure conversation. You can do that right at wiscap.com. That's WISCAP.com. Be talking this week about some year-end tax planning, and of course, it's never too early to understand and of course plan for things like your tax liability. But this year, we've got the one big, beautiful bill act, the OBBBA. I think I got enough B's in there. That alters some of the tax rules that impact 2025, as well as looking forward to 2026. Right, Nate?
Yeah, that's exactly right. So a lot of these things that were rules that were due to sunset are actually now permanent. And so yeah, we'd like to go over those with you. And yeah, I'll hand it over to Tom.
Okay, perfect. Then Tom, let's talk a little bit about some of those things. I hear about terms like tax loss harvesting and other things. What kind of in context here? What do we need to be thinking about this time of year?
Well, Sean, one of the key things that, as you come up to the end of the year is how much money am I going to be paying in taxes? And is there a way to be intelligent about looking at your tax obligations within the context of longer term, what you want to accomplish?
Mm.
So sometimes those accomplishments are just simply, is there a way to reduce my taxes? And that's what we often hear a term called tax loss harvesting. And that means basically, even in a good year like this year, sometimes there's an investment that may have be underwater. It's
Mm.
less than what you paid for, or less than your cost basis. So that's a relatively simple one. You want to take a look at it. But as we were talking about how we're a little bit different
Hmm.
as analysts, we don't want the tax tail to wag the dog. So sometimes you'll look at this, okay, I see that there's a potential for tax savings, but how does that fit into our long-term strategy? You don't want to sell something that's down just to save taxes because no one's in a 100% tax bracket. So if it goes down, you don't buy it back and then it recovers, you'll feel pretty foolish that you saved a couple dollars on taxes. But this year, the tax law changes that you were talking about means that there's different rules for different individuals depending on their tax basis. We call this line adjusted gross income. And if you look at your tax return last year, it's line 11 on the 2024 tax return. And that number, that adjusted gross income, it actually puts you into different considerations for tax planning because charitable deductions can be treated differently. The ability to deduct other items can be treated differently. So it's really important to take a look at your whole picture, but also at that adjusted gross income (AGI) and see how it affects you.
I got to ask too, and Nate, I'll bring you in on this part of the conversation too, as we talk about this stuff with kind of having this out there now. It really, I know one of the things that sometimes prevents people from making any type of decision is things when they're not clear, and it seems like by extending these provisions, it really brings some very clear guidance and rules, and kind of does away with some of that uncertainty that some folks may have been facing when it comes to charitable giving strategies.
Yeah, that's exactly right. And just to kind of level set everyone, with the tax code, you can give as an individual, you can give $19,000 away to pretty much anyone you want. And
Hmm.
so, like, if you have a child, for example, if you have a child, and if both partners or both spouses get want to give money, the max to the child, so 19,000 times two is $38,000. And so, if you're a grandparent and want to give some money away, so you can give $19,000 to anyone you want. Don't have to be related. So there's that level set rule. If you do more than that, you have to file what's a gift tax return, and that's a form 709. So that just says you're giving away more money than you're allowed to, and I believe the maximum set with this new rule is like almost
Hmm.
$14 million. So it goes against the $14 million you could possibly give away in your lifetime. So if you're lucky to hit that, God bless you.
That's
But
pretty.
anyway, so that's the level set right there. And then when the IRS makes rules, they want more people to do the standard deduction than do itemized taxes, right? So it's more of a hassle for the people to do itemized taxes. It's more of a hassle for the IRS to look at itemized taxes. So they try to make rules that actually make things that make a standard deduction, right? And so with that level set now, that you know, they made some rules with the charitable giving. So now, if you um, if you make more than $200,000 on the AGI, that line 11 that my dad mentioned, is that sometimes if you give just a small amounts away, you don't get the standard deduction. And but for the standard deduction, they want to make sure that you give money to your church and different schools and stuff like that. So they actually kind of include that in the standard deduction. So you can give $1,000 to anyone in the standard deduction. So and then I started flipping back to the if you make over 200,000. So they made it that if you give away less than 0.5% of your AGI, that you can't take the deduction. So in real terms, if you're making $100,000, you have to make a
Five,
$1,000 deduction or
$500.
$500 deduction to make that count. So
I was going to ask you too. Is some of this why I remember back a few years ago when I'd go to like St. Vinny's or Goodwill and I'd make a donation or drop off some stuff, doing some spring cleaning or something. My wife always used to say, "Get a receipt." I think her line was always, "Get a receipt." I don't know exactly what that was. She doesn't say that to me anymore. I don't know if is this part of it as we see the change in the standard deduction where some of those maybe for folks that are a little more charitable or in those kind of areas where they're that making smaller donations where it may not be you're not going to pass that number. Is that partially why my wife is telling me not to grab that receipt anymore?
no, yeah, that's exactly right. So it's a hassle to get those receipts. It's a hassle to track them, keep them tax time. It's a trouble for the IRS to look at those too. So, yeah, most of those things that you don't. Reason why you're not collecting those as vigilante as you were is that it's pretty much involved in the standard deduction.
Hmm. Fantastic stuff. As we talk with Nathan and Tom Plumb of Wisconsin Capital Management here on 1310 WIBA, talking this week about some year-end tax planning. You heard Nathan talk a little bit about those itemized charitable deductions. We'll talk a little bit more about that. We'll also talk about some of those provisions that were in the big beautiful bill that have been made permanent and how that affects planning. We're going to get to that and so much more in just a moment. In the meantime, we haven't been over to the website wizcap.com. That's WISCAP.com. That's wizcap.com. It's a great place to learn more about Wisconsin Capital Management, learn more about Tom. You can learn more about Nate there as well. Again, that's wizcap.com. Also, a great feature on the website is an opportunity to have a complimentary, no-pressure conversation right on the website, wizcap.com. That's WISCAP.com. We're going to continue our conversation with Nate and Tom. We will do that next as Ask the Experts with Wisconsin Capital Management continues right here on 1310 WIBA. 1310 WIBA and Ask the Experts, talking this morning with the folks from Wisconsin Capital Management. We've got Tom and Nathan Plumb. Of course, they do come to us from Wisconsin Capital Management. Online, wizcap.com. That's WISCAP.com. Great website to learn more about Wisconsin Capital Management. Learn about that low minimum, the get on in, and learn more about Wisconsin Capital Management. You can schedule that complimentary, no pressure conversation also right at wizcap.com. That's WISCAP.com. Talking with the guys this week about some year-end tax planning. Never too early to start thinking this year or next year for that matter. And, as we wrapped up that last segment, we started talking a little bit about charitable giving and some of the rules. And as we kind of break down those itemized charitable deductions, let's kind of get a little bit more into that and talk a little bit more about some of that standard deduction and some of the information folks need to know. Tom, let's talk a little bit about looking ahead to 2026 and kind of those numbers there that folks need to be aware of.
Sean, the tax law changes over the last few times that the government has done that. They've had what we call sunset provisions. So they were in a spot where unless they were extended, they would revert back to previous areas. So that caused a significant amount of challenges for planning because you may have a tax bracket this year that stays this rate, it'll change. The charitable gift laws would change. The estate tax gift transfer rules might change if they didn't extend them. The big change with the one big beautiful bill is that the changes are made permanent unless, of course, permanent in terms of what our government does, but they're permanent unless they're changed. So instead of waiting for something and will they extend it, you may still be concerned, will they change it, But it takes a specific act Well, before, if they did nothing, it would revert. And some of that is very important. So the tax brackets, for example, are permanent. That's a big thing. If you're making charitable gifts and you look at how much I can deduct, you can deduct them up to 60% of your adjusted gross income. That historically was 50%, but again, it had to be extended. So now you can make some plans in the future, look at what your income's going to be, understand whether or not you can deduct something, and whether or not if you don't use it, can I use it for the following years? So if I didn't meet that limit, and then one of the keys for gift tax and estate planning again is this permanent $15 million restriction, or excuse me, the limitation on gifts before they become taxable. So anytime we call it transfer, it's a gift during your lifetime or in your estate, but they're added up for your whole lifetime. $15 million per person, adjusting for inflation in the future. So that's $30 million for couples. And they also have included something called portability. So
Mm.
if you don't use the entire $15 million, your spouse can use what's remaining on their tax return.
Okay.
Obviously, that doesn't affect a lot of people, but those that do, especially with the inflation we've had, it may be small business people, it may be even some farms. Some businesses have built up some value, and it's nice to know that the rules won't revert to $1 million or $600,000 like you were always threatened with in the past.
It's interesting, Tom, when you mention, we think about some of these numbers and people are like, all those millions, 13, 10, 15 million, however million, I'll never achieve that. And then you start looking at, property values and real estate values and, I'm just a farmer. I'll never. And then they suddenly realize, yeah, that may be something that is definitely in your wheelhouse. Something I got to ask you too, Tom, is you mentioned that, with sunset provisions and doing away with them. I know what you and Nathan are doing day in and day out is planning, and a lot of it has to do with really kind of forecasting, understanding things. I've got to guess for everybody, but especially people in your line of work, having permanence, having some type of thing saying in order to do away with this stuff, it would require a separate act. That's got to really help things out. Really got to help things when it comes to planning is doing away with those sunset provisions.
Right. And Sean, as we talked about in the past, the required minimum distributions, for example, from retirement accounts, when you inherit those, there was a lot of questions even after they passed the bill, the Secure Act,
Mm.
that when they were going to enforce it, how it was going to be. But now you know that, for example, you inherit an IRA from a relative, not your spouse, that you basically have a 10-year time frame that you have to take that money out.
Mm.
There was a lot of questions before, and there's a lot of changes and things like that. But it really does help people in understanding how they can transfer assets to their children, to their grandchildren, et cetera, and having some permanency where the rules aren't going to revert.
Mm.
So again, that $15 million sounds like a lot of money, but until they had this big, beautiful bill, it always was threatened that it was going to revert down to $3 million,
Mm.
for example, or $1 million in the past. And that did affect a lot of people and put them in an uncertain situation where some people actually had to have complex estate plans because they were afraid that if this reverted back to $1 million, I would be affected by that. Now you can simplify some of your planning because most people or many people are not going to be looking at that $15 million as a threat, but they might have had to look at $1 million as a threat for estate tax.
I love.
And we haven't talked about it in the past, but the estate tax, it runs 40 some percent. So
Oh,
it's a big bite.
You gotta love this, the permanence. I would love as well getting that perspective as we talked this morning with Tom and Nate. Of course, Tom and Nate Plumb comes to us from Wisconsin Capital Management, the website whizcap.com. That's WISCAP.com. Great place to get to know both Nate and Tom. Also learn about everything that they can do at Wisconsin Capital Management. Really cool feature as well. If you head on over to whizcap.com, you can set up a complimentary, no pressure conversation right from the website. It's a little pop-up bubble right on the website that you can do that from. Again, just head on over to whizcap.com. That's WISCAP.com. Of course, as we've talked about all this good news and all this great information, what can folks be doing right now, Nathan? What are some of the tips that people need to be aware of for the present day, for this day exactly?
Yeah, I think this is a time of year when people are starting to think about Christmas shopping. Financial advice is not wait until Black Friday. Try to get it out a little bit before. So when you're out trying to find that last minute, was it Demon Hunters franchise toys? Yeah. So if you're having trouble with that, I would recommend something, something for, something that's immediately gratifying, like that Demon Hunters example, but something have a little bit teach a little bit of delayed gratification too. So if you just open up, just for a minimum $1,000 in an equity fund for someone young, that's an incredible gift. They'll see it kind of grow and grow. And if the person's working, you could do that in what's called a Roth IRA. That's even better, because then the growth will never be taxed. And so, that's the kind of things that you really should be thinking about. So, like, what practical things can I do this year? What would be a gift that would be fun for, a toy that'd be fun this year, or what's the hot toy this year? Or, and combine that with something that, it'll kind of leave a legacy, and, just, show people how that power of compounding works. It's the eighth wonder of the world. And, essentially if it's, you can expect a 10% return every year, your money will literally double every 7.2 years. So every 7 point years, it will double. Then another 7 point years, it will also double. And then another 7 point years, and that will also double. And that's the secret. And the key to that is actually starting now. So that's a time element of that. And just, sometimes you just put money in and just literally don't touch it. So
Yeah, you think, and Nate, I love that perspective as well, as you think about gift giving and other things, and what a great learning tool as well, as you get this for the kiddo or the grandkid, and getting them involved in investing and understanding that stuff, and them learning about, you mentioned compounding, and just seeing those numbers and what they're able to do. No better thing you can do for a kid is to really get them engaged in that stuff, financial security and their financial future as well. And as we talk about financial security and your financial future, it's a really great opportunity today to head on over to the website, whizcap.com. That's WISCAP.com. Not only can you learn more about Tom, Nate, and the whole team at Wisconsin Capital Management, you can set up a complimentary, no pressure conversation right from whizcap.com. You scroll down a little bit, you'll see that little pop up there, and you can do that right online. Again, the website, whizcap.com. That's WISCAP.com. Tom, Nate, it's always great seeing both of you guys, and enjoy this beautiful day.
thank you,
Great,
Sean.
and you too, Sean.
And
Yeah,
again,
pleasure as always.
yeah, it's always great hanging out with you guys. And again, the website for Wisconsin Capital Management, that's whizcap.com. News comes your way next right here on 1310 WIBA.